an unsettling calm in the markets. The VIX has fallen for 11 days in a row and now sits at 25, heading towards the key risk-on, risk-off 20 level. And Bitcoin's 30-day volatility is currently lower than the Nasdaq and the S&P 500s and is closing in on a 6-year low, just above the low levels recorded in 2018, 2019 and 2020. Traders should be aware that typically Bitcoin has a short bias when volatility contracts to these levels, and there's no reason that the market today should be any different. On the macro front, we're seeing an interesting narrative develop about the Fed pausing its relentless rate hikes to try and contain the collateral damage of its efforts to tame inflation. That in turn brings about its own risks, and we think there's a chance it could be a bit of pre-midterm theatre. But over in China, we woke this morning to reports that Beijing is looking at how to end its zero-COVID strategy that has strangled global trade and played a key role in creating the inflation that is forcing the Fed down its current self-destructive policy path. Last week, President Xi consolidated power and officially secured a third term as a CCP head, unveiling a new leadership team packed with loyalists. And in highly centralized nations where admitting policy errors can be fatal, it's possible that Xi was waiting until having secured his position before reversing these highly destructive policies. Bitcoin and Ethereum remain slightly bid, sitting above the 20k and the 1500 levels respectively, but without any confirmed macro drivers, these uptrends remain precarious.